part of something that has potential to be big, and they're not setting a price, but they'll kind of go along with whatever price the entrepreneur says is what he or she wants. And then the same thing goes for, John and I have talked about this, right? So VC firms, whether something is 5, 8, or 10 pre, a lot of times they aren't thinking about the valuation at seed stage because it seems relatively inexpensive relative to Series A's. But I think that the thing that oftentimes VCs and entrepreneurs don't think about is if you raise 3 on 10, you're at 13 post. Going into your Series A, Series A VCs are then looking at entrepreneurs who want an up round from their seed post money, and that's why a lot of Series A prices I think have gone up. And a lot of people have been frustrated about Series A pricing, but I think it's large part because seed pricing has been kind of expensive.
How do you change you said that sometimes some of this is because the entrepreneur wants more, and how do you change the behavior of the entrepreneur, either A, wanting more, or B, wanting a higher valuation instead of thinking more thoughtfully? How do you change the behavior of the entrepreneur?
The question I usually ask people is, what are you going to do with the money? So what do you need to prove, and what do you want to be able to say as you raise the next round, as you move forward? And I think one of the things that's pretty different now than was a pretty new thing is it's pretty cost effective to get a product in the market and see if users use it or not. When I started, when I ran my company 15 years ago, it was just, you had to build a company and then you could build products. And now you can build products and then build a company around it. But I think it's a pretty fundamentally different thing. So I think what I do is I talk a lot to the executives and say, hey, what are you going to do with it? And what do we really want to show? What do we want to improve? This is the first step, second step, third step, in a pretty long road. And then do you really want to take all evolution now? That kind of thing.
Sometimes it's as simple as making the point that the one thing you can never get back are shares once you give them away. And you can always go and raise more capital, assuming things are going well. You can also, frankly, go and start another company if things aren't going well. That's forgotten much of the time. Interestingly enough, I think right now you're seeing larger seed rounds. You're also seeing the typical size of seed rounds, and I think actually that still is the majority. But you're also seeing more companies bootstrap, and so it really and I think about Meraki, who we heard from earlier today. You think about GitHub. You think about Qualtrics. Qualtrics is a company that went 10 years without raising outside financing because they decided it was too expensive to offer those shares to investors, and it wasn't right for them. And so I think it comes down to what should be an internally driven decision by the company. It should never be based on investor demand. That's another common mistake. And it's very much situation dependent.
Some of it is, the issue is that we, to a degree, we all do it to ourselves, right? Because what everybody wants is an objective measure of how well you're doing. Kids want scores on their tests because they want to know how well they're doing. It's really hard to know if the teacher says, well, you're doing good. What does good exactly mean? And as we professionalize this industry, we look for metrics, right? And we ourselves throw around numbers like XYZ pre-post, raise this much, da-da-da. That's how we keep track ourselves. And it's not surprising that if the KPI that you're measuring is valuation and money raised, the entrepreneur who's looking for a grade on his exam is going to peg it because that's how they evaluate. The tricky thing that we venture capitalists should try to do is to think hard about what are the metrics that you look for in terms of building a great business versus what are the metrics you look for doing a series of increasingly expensive fundraisers, because the two aren't necessarily the same. But we do the disservice ourselves. It's unfair to say, well, it's the entrepreneurs. We go around like every cocktail party you have with a venture capitalist, like, hey, I raised this at this pre, blah, 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 right? So, it's sort of like sports. If all you do is count the numbers, then you stop winning and you start playing for the stats, right? And that's kind of what's happening a little bit right now.
John, I'm curious about whether you think that VC firms, especially larger VC firms like Greylock, like Sequoia, like Index, and even Kleiner, does it make sense for them to be doing seed stage investing? I mean, Doug came on here earlier and he said, we don't do spray and play. You guys are committing more money, with your new raise to, your discovery fund. Index does seed stage, and you're a micro VC now, and you did do, Kleiner does some seed stage. Does it make sense? John, I want you to answer that question.
Well, we feel pretty good about it. So I think, we've done a number of seed investments over the past couple of years through this thing called the Discovery Fund. Part of the insight that the guys had before I got there was that Reed is one of the best seed investors in the history of investing. And so to say that now that he works at Greylock, he should stop doing that seemed kind of crazy. So, I think for us, it's less about the firm doing it, more about getting involved with interesting companies and trying to help them do stuff that is meaningful. And then it's a way for us to prove that they want us to work with them long term. And, Message Me is a company that I led to AN earlier this year. We were part of the seed round there. It gave me a chance to work with Arjun and the team and get really comfortable and get really excited about them. And then we stepped up into DA. But no, we don't do that for everybody. But I think that that some seed investments I see very, very often. Some I see less often because the entrepreneur needs less help. But I think it's up for us. It's all about trying to match what we're good at, what we can be good at, with what entrepreneurs need. And it's less of a portfolio or spray and pray strategy as it is try to help.
Would you guys all agree with that it makes sense on sort of, what I'm reading is that it makes sense on sort of an individual basis and determined on the idea of the entrepreneur? How about you guys? Do you feel that same way?
Yeah, I'd say, look, I mean, the way we try to do it is that ultimately, even if it's a seed investment, it's the individual partner's responsibility to look after it. And so, as a venture capitalist, there's sort of this natural balance that you have. The busier you get with your companies, the less you invest. And the less busy you are, you invest more. So inevitably, as we get busy, we do less seed investments. But we have the responsibility of looking after them, and that's helpful. It helps from a lead gen perspective because it leads to Series A. And it caps really ultimately the number because I don't think that responsibly a partner can really think more than 3 or 4 at any one period of time and actually act like they are paying attention to those investors. So I think at that level it's good. If you start just throwing money at it for lead gen, yeah, I mean, I don't think it does you much good. It doesn't do much for your reputation. I don't think that's appropriate.
Yeah, from the seed perspective, our model is about a streamlined team surrounding these companies with as much in terms of resources as we possibly can. We found that we can only do that for very few companies, and so our goal is to create as many large outcomes as we can from as small of initial set as possible. So it might be a little bit different, but I think in general very like-minded to both John and Mike.
I want to switch gears to the whole value-added services issue, because I think that there's some firms who have more of an agency model. They take on not just recruiting, but they have services for marketing, for business development, for whatever. I don't know. There's journalists joining VC firms. There's a lot of sort of services that are being thrown out there. Do those services really change the trajectory of a company? I mean, if you think about some of the great iconic companies that have come about in the past 10, 15 years, the Google, the Facebooks, they didn't seem to have that agency of services available to them, maybe recruiting at most, but would they have been different companies at this age?
I think it's hard to say if they would have been different companies. I am a fan of value-added services, and I think it's been marketed more strongly in the past 5 years, but I think a lot of firms have been doing it for a long time, actually. At Kleiner, we were maybe one of the first firms to have recruiting partners, and they were very involved in putting together the initial management teams at Google, at One Kings Lane. They made a really big difference. So I'm a big fan. I don't believe that you have to have it to be a great firm. I do think the most important thing is really, I think, the partner and the relationship that an entrepreneur and a partner has. But I certainly think it's really helpful at all stages. You're seeing First Round Capital, I think, is doing a great job with value-added services for small companies, and AH obviously on the other end of agency model. But
I mean, John.
We believe in recruiting a lot. Recruiting is about everything for a startup. So getting just the right person in for just the right role is really the difference between getting it right and missing. And that's true at the executive level. So we have an executive talent team. It's true at the director and below level. We have getting the right engineers, the right designers. It's just about everything. And so whether you're helping the company get the person or whether you're helping them learn how to build their own recruiting function, my experience as an operator says that's about almost completely determinative of whether a company will succeed or not. So, for us, we believe in it very, very strongly.
But what about the others? I mean, there's a lot of other services that are being offered. Design, business development, marketing. I mean, really something that.
You know, let me be
companies need?
provocative for a second about this. We don't have a
Please be
recruiting.
provocative.
We don't have a recruiting partner. I've been involved probably in the last year in 10 executive level searches across our portfolio, maybe more. What actually happens is that there are firms who have recruiting partners. Those recruiting partners then help hire a recruiting agency from the outside, and then the agency does the work. So it's, you know, Riviera or Schweikler or so on. By and large, and there may be exceptions on the panel, but by and large, that's what happens. So that begs the question, what exactly is the recruiting partner doing if what they're actually doing is then hiring a headhunter from the outside, supposedly not to upset the ecosystem and pay them a fee, I suppose? Is that what it means? You know, I don't thoroughly understand it. Now, there are firms that run proprietary searches, maybe Greylock is one of them, but a lot of them are just hiring other outside recruiters. So then what exactly is the value added? You know, it's probably not value detracting. But if I'm an entrepreneur, ultimately, I'm still dependent on Schweikler and Riviera and Diversa and all the guys that are doing the recruiting anyway. So what's the point?
John, do you want to respond?
Well, I mean, my observation is having run a bunch of searches at Mozilla and in my company before, I look at somebody, like the recruiting partners at Sequoia, the recruiting partners at Greylock, and the level of thought about executive and fit and how to match them in a team, it's just huge. So, you know, Jeff Markowitz at our place, he used to run the venture practice at Heidrick. He knows everyone partly. He has the Rolodex too. He's often interacts with people. He's often helped see them in action in companies, including, you know, some of yours. So I think
you know, we're on boards together where we've had Markowitz involved, and he's hired a firm to go do a search, right?
yeah, but you're telling me he's been zero added beyond that. I'll make sure he gets
Some
that.
value added, but
I'll let him know.
why have the firm if you have Markowitz?
But here, let's take marketing partners, for example, right? Marketing partners, I think, are also a really great value add because they basically are the center point of contact with the New York Times, the Wall Street Journal, the USA Today, like basically, and then oftentimes vertically specific publications, right? Where an individual partner may not know the best journalists in enterprise, SaaS, or whatever, but your marketing partner ideally has an amazing Rolodex and has done a ton of coaching of how to launch a company, like very kind of vertical specific stuff that a lot of times individual partners aren't as good at. I think that's a fantastic kind of shared resource across.
But at what point does the entrepreneur actually have to be able to learn? You know, it sounds like, yeah, they can outsource, you know, press to this person, or they can outsource recruiting to this person. But like, isn't that part of being a great entrepreneur is being able to manage that, or at least be able to hire for someone that's really good at managing that?
Look, I think this is exactly the point. Everybody says, well, most firms will tell you they have services to some degree. And every firm means something different by that. It might be someone who just selects an executive recruiter, but it also might be, you know, for example, we have one of John's former employees at Mozilla at Sequoia who goes to every new company that we get into business with and helps them set up engineering recruiting, and then helps them come up with, you know, interview sheets and scorecards and things like that. So it's a very different approach. And getting to the question that you asked, it's about what Sanjit said earlier, and being very careful not to offer companies a crutch, because then they will never develop. You need to help them kickstart, get going, learn the best practices, you know, that a great company like Mozilla employ to grow over time, so that they can take off on their own. And the other thing we've learned through these services efforts, which we have had for over a decade, is you don't want to delegate. And I would be very careful if I was an entrepreneur about who you're going to go work with, because if they're delegating, you're not getting the service from the person that you chose to work with in the beginning. So you do not want to work with a firm that's going to outsource a board seat, or it's going to outsource the day-to-day interactions from, you know, marketing or recruiting or anything else. You want to be like Volpe, and you want to help hands-on with that search.
Right.
I mean, at one point, I'll just add one last point on the value. I do believe in value-added services. I do think that the biggest value add is the board member's own knowledge of how to build a business. That is by far the greatest value, because if you're a decent board member, you should know which recruiters do a good job. You should know which marketing firm is a great fit for them. You should know how to be able to hire a couple of people in recruiting to help the company do individual contributor recruiting. You should be able to run them through a fundraising. That's stuff that's your value added. So I do think that value added is enormously important. I think what a lot of firms do is they use that notion of value added as their marketing tool to get entrepreneurs to come to them, as opposed to genuinely having the partners add the value. And I do think that it's super important for partners to really be doing the heavy lifting.
So I want to talk a little bit about innovation and whether innovation is dying in Silicon Valley. Because we had a guest here at Disrupt New York who said that he's sort of disgusted by the lack of innovation taking place in the Valley. And I want to see if you guys agree with that, or if you disagree, why?
I completely disagree. I think that what you're seeing today and what many people are seeing is that there are more companies that are being started than ever before. And I think that makes it harder to pick the ones that are going to build enormous companies over time. And so I think oftentimes it's, people say there's a dearth of consumer and the consumer's boring, there's been a great company a long time, but I think it's actually confusion, and there's actually more difficulty in figuring out which ones are going to win these days. And I just think you see technology just creeping into almost every industry that we're aware of. We're going to announce a wonderful new partnership in a couple of weeks that I never would have thought was a vertical where we would have a partnership. So I couldn't disagree more with that.
Yeah, I think we're in a zone now where if it's not an electric car, or a Hyperloop, or a rocket pack, or something like that, it's somehow not innovation. And I think if you just try to think about what the world was like and how you lived your life, even 4 or 5 years ago, incredibly different. And I have an 8-year-old son and a 1-year-old son, and I think about the ways that they interact with my parents who don't live nearby. So they FaceTime with them all the time. They talk to them all the time. They know their grandparents in a way that I never did. My granddad was a rocket engineer. So thinking about how I could have known him in a different way, it would have been transformative. And so I think that things like academia.edu or ResearchGate or connecting the scientists together, I think just because it's understandable or seems like it's not impossible for you to conceive, doesn't mean it's not innovation. I think the way we use our networks is transforming most everything.
So I would partially agree, partially disagree. The agree is, we're seed stage investors at Cowboy, so we meet with a lot of small companies. And I would say a lot of people come to us with ideas that are not that big. And they're kind of like features, and they haven't really thought about like how big the market is or how much money they could make if they crushed it and had 20% market share. They're not big ideas. They're not like moonshots. On the other hand, and so when you think about like what might be kind of moonshot, really big ideas that were built in the past 10 years, like let's say Uber or Dropbox or Evernote, Square, Pinterest, Twitter, companies that you would be really proud to be associated with. A lot of times those companies are not groundbreaking the first 2 or 3 years. Like they don't become kind of like those like kind of poster child companies until 4 or 5 years in, when they've gotten their $100 million valuation and they've raised $30 million. That's when they are like heroes. And like before then, I don't know if you guys remember, like Twitter was kind of walking around at conferences trying to explain to people what it was, and nobody believed it. So I think it's a combination of both.
One of my favorite quotes is, I can't find a source for it, is the next big thing is always beneath contempt. So the implication is it's beneath contempt and laughable until it's not.
Yeah. What do you think, Mike?
I do agree. There's more innovation now than there was before. I'd say that I find that generally I see the opposite phenomenon, where sometimes we have to encourage entrepreneurs to tune down their short-term ambition, because there are businesses that come out the gates and are doing incredible things. 95% of businesses aren't that way, but that doesn't mean they're failures. You do need to have an appropriate level of ambition, and not every single concept is going to dramatically change the world, but there's going to be some great businesses built, and you just have to be paced about the expansion of your vision, right? And your vision can get bigger and bigger and bigger over time. I spent a bunch of years at Cisco. I think originally we were just making silly little routers, and then eventually it became this gigantic company. But the original vision had little to do with what it happened at the end. And I think that kind of coaching entrepreneurs to be a little bit more pragmatic and realistic about what they can accomplish in the short term in terms of innovation is an important thing that we should do.
Well, I want to end on one question. Who are the entrepreneur heroes of this generation? So, we all have kids, in this sort of similar age group. I'm curious, who are Who are the entrepreneurs that our kids are going to look to and say, I want to be like that?
It's probably most appropriate to answer that, excluding the Sequoia portfolio, to avoid being self-serving for once. So outside the portfolio, I think the first company that comes to mind in entrepreneurs, Travis at Uber. I mean, you think about an entrepreneur that had this incredible idea that sounded, almost like science fiction, but then was able to operationalize a company at such a tremendous scale from the very beginning. You look at the team they've built, the big hires they announced the last few weeks. I think they've done a fabulous job there. And I think we have to remember the bootstrap companies too. And you look at what GitHub has done, and known those guys for 4 years. And it's also a fabulous example of taking another route and putting yourself right in the very heart, in the very center of technology. So those are probably the first two that come to mind for me.
So I'll throw out an enterprise answer because that's mostly what I do in investing. I think Mark Benioff is somebody that a lot of kids should be looking up to. I think that the level of ambition that he continues to have and joy he has with which he pursues that vision is absolutely fantastic. I think the way he's been navigating organizational evolution over the last 15 years or so has been pretty amazing. The way he took on a very specific target of beating Siebel Systems at their game in the beginning to establish himself was brilliant in terms of finding a big enough vertical that he could go dominate with a technology transition that was important. The number of people that company has produced over time that are fantastic, high quality people is amazing. So he's one of my heroes.
John?
Yeah, I've got a couple outside the portfolio. I would say I think what Phil Libben started at Evernote is unbelievable and amazing and pure singular vision. He's just run the thing up and up and up, and I think it's been amazing. I would say that the one person that's a little bit of a curveball is I'm on the board of a nonprofit called Quit for America, where Jennifer Powell co-owns, and she's my absolute entrepreneurial hero. She's going after government to fix government and city governments, and my hero for sure.
I mean, I think kids today, I assume, are thinking about Mark Zuckerberg and maybe Elon Musk, maybe Jack Dorsey. And so I hope that those are also guys that 10 years from now when our kids are thinking about starting companies. And then I also think that there's a whole crop of female CEOs. Some like Adi, who is the CEO of House, who was on our stage earlier today, Jen and Jenny from Rent the Runway, Susan and Allie from One Kings Lane. I think there's hopefully a whole generation of female CEOs that will be up there with the guys.
Great. Well, thank you so much.
Yeah.